Good morning, everyone. Welcome back to our weekly stock market update video. This is where we do analysis on the QQQ, as well as the 7 mega cap techs: Meta, Tesla, Amazon, Google, Microsoft, Apple, Nvidia. We'll be taking a look at their support resistance levels to give us more clues where if they will likely be helping to move the market up or down. All right, let's get started. So we had a pretty volatile week, and we had the FOMC meeting on Wednesday that gave us the 50 basis point cut. I remember talking about last week. It was pricing in 50-50. And then on Monday or Tuesday, I started pricing more like a 60%. That ended up being a 50% cut. So we got that breakout. Let's take a look at that cut that day. So it was a interesting price action, I would say. It usually always happens like this. And I always talk about you don't want to look at this day's move because literally after Jay Powell finishes talking, we have maybe like an hour or half an hour left, right? To really, for the big money to position themselves. So that's why I always say that the following day's price action matters a lot more to me than that little last hour of the price action that we have. You can see it was very volatile. We got that 50 cut and we popped up, and next thing you know, we closed at the low of the day. And for me, because we didn't even break this 4 days of range consolidation. You guys know what I talked about over where this level, where we want to see which way it breaks for us to be more convinced of the price action of that day. So essentially, we didn't even break the lows, so bears really didn't do that much either on that day. And the next thing we know, right, we had this overnight just bull trending move where they bulls bought everything up overnight, and then we gapped up. I didn't like how much this where we kind of just open here and then we end up closing pretty much where we opened for the day. But given that we were already up 3% up by the point up here, so it makes sense. The Qs don't really run that much more than 3% on the day unless there's some kind of huge catalyst. We rarely see like 4 or 5% days on the Qs, and we got that 4-hour pullback here, and now we're just looking for that, in my opinion, 4-hour higher low. So 4-hour higher low just means the low is higher than the prior low. And now we're just seeing if we get that continuation of the 4-hour uptrend. So if we can break that Thursday's high, then we're likely going to head higher. We're just pretty much double topping right here with this prior high at this moment. And on the daily chart, it was very clear as well. Bears really didn't do that much on Friday. You can see we pretty much just gap filled and then V-shaped. So yeah, for me, the first step for bears, you need to break it back down below this sideways structure from this FOMC, right? Maybe give me like something like a head and shoulders. We come all the way back down here and then try to bounce, get a weak bounce, and then break bear. That'll be significant for me on the bear side. And technically, we kind of broke out of this tiny range equilibrium on the bull side as well after this Thursday. So for bears to take it back after a bull break, that's also very significant for me. So it will be key watch on Monday or Tuesday, see what they do. And if we just, break back above, that's just a daily uptrend continuation, right? Currently, we're in daily uptrend. So I always talk about this where we don't want to fight the trend, especially when it's very, very clear. But we aren't that clear at the moment. You can see we've been chopping around for a while. But let's see if we end this bull break, we'll get some follow through from this tiny range bull break. If we do break above here, we're likely going to fill this gap and test potentially below this 495 level for me. We can just break through this. For bears, like I said, break below that 4-hour EMA 12 and then potentially form that head and shoulders. And we still need to break this sideways structure for anything to really be significant on the bear side. So at this moment, nothing yet for now. And earnings are coming up. So we had a couple earnings already this week. So I don't see really that much fireworks, and elections are coming up as well. So there's a lot of uncertainty for September. So I would say be cautious of more probably, potential like this would come up here, and maybe there's more sideways action going on in September, at least for now, because of the uncertainty of the market. Market doesn't like uncertainty. And so we'll see how it goes this next 2 weeks. And we can see Meta lead bull. So I'm talking about this one for a while, right? Um, yeah, I've been talking about this one for a few weeks, saying Meta is pretty much just right under all-time highs, and this pullback was a lot stronger than Q's pullback. So it's relative strength, right? You can see, look, Q's pullback, we almost came back to this prior fear low. Meanwhile, Meta pulled back like 40% of its bounce, right? Maybe not even 40%. Let's see. Yeah, roughly 40, 50%. So 50% of the bounce. So they're still favoring the bulls. Next thing we know, it's at all-time highs. So whenever it's all-time highs, don't short it because there's just no resistance. You don't know. You don't know if it's going to just keep going until it gets to some kind of resistance. Obviously, if the whole market is dropping, right, everything else, Tesla, Amazon, Google, Microsoft, is tanking, and Meta is all-time highs, right? Then you could short it, right? There's a good chance that Meta is going to roll over versus holding up the rest of the six. For now, everything still looks okay. There's no like fears in the market at this given moment, so I wouldn't be really shorting an all-time high stock. You can play on the 5 minute maybe, set tight stop, get a quick win, scalp it, but I wouldn't be shorting and holding all-time high stocks at this given moment. And if we do pull back, right, first level of support I'll be looking at is 542, which is prior resistance, 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 resistance. Come back to it, it'll likely act as support for now, at least an initial bounce. And for resistance wise, there is no resistance because we are all-time highs. All right, let's take a look at Tesla. All right, so once we broke out of that, last week we talked about, we broke out of this equilibrium bull, right? This is a tiny range. This is a tiny range, right? Broke bull out of it. And we came back tested. I talked about saying, okay, we need to pretty much bounce there right away because of the back test. Because we don't want to break bull and then come back and then crack through it and come back below. That'll be a bull trap. So we back tested and held it. Bulls held that, so that was a good sign on last week. And now we just kind of grinding up. And nice move on Thursday with the market. Currently, we're just right under the structure. It's very clear resistance, right? And, of this cluster of volume here traded before we had this flush. So we just right under it. Currently, it's just slightly pulling back a little bit, which makes sense. You know, sellers, peg holders, and people that want to get out break even will probably be selling when price hits here and get a little bit of a pullback. But as long as the structure is intact, a small pullback doesn't matter, and we can continue to grind up. Yeah, as long as it holds the EMA 12, this teal looking line, exponential moving average 12, and it keeps on grinding and bouncing off of it every time, then bulls should be in control. No signs of red flags yet at this moment. We get another leg up in the market. You want to see Tesla come up and test this 252 to try to test this structure. And for you bears, break this teal looking line and give me a downtrend. Then I would start to see this may potentially be an even longer term tightening range if that happens. But at this moment, no signs of it, right? Daily uptrend, 4 hour is an uptrend, hourly is an uptrend, and we're still grinding up from the EMAs. No signs of that yet. Nope. All right, let's take a look at Amazon. Yeah, no signs of red flag either. We talked about this last week where this was the structure, right? This is the sideways structure. It's been battling bulls and bears, bull break, and then next thing we just kind of grinding up over and over and over. So once we bull break, the trend never reversed. So this is currently in a 4 hour uptrend, and no signs of slowdown yet at this moment. Very clear as well on the daily, right? Big move up. This is a bull flag battle. Bears trying to take it lower and couldn't. Next thing you know, bull flag confirmed. Yeah, very clear bull flag. Let's see. Yeah, pretty much just touch the 382 and then flags, bull flag confirmed. Daily uptrend continuation. No signs of slowdown at this moment, but we are kind of right at resistance. can see this top resistance, 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 resistance. We did get a pullback on Friday, right? We kind of like rejected a little bit, but then we just V-shaped at the end of the day. So no signs of slowdown, even at resistance. And we are kind of above it already too. So that resistance that we got on Friday where it pulled back, that was probably just the initial selling. And now we're just looking pretty much all-time highs, right? All-time high structure right here. So that's the structure I'll be looking at next. Yeah, see, there's not even that much volume above us for resistance. So we break here, next level I'll be looking at. Yeah, there's not much, 4%, 4.3%. There's gonna be some resistance closer to this 194 zone for me right here. When we come up to it, we break that, then we're looking at 200, closer to all-time highs. All right, let's see Google. So Google has been in the lead bear for a while. Let's see what it's been doing now. Okay, so it's catching up slightly now, finally. Everyone was bouncing. This one was just going down forever. This was a bear flag. So daily bear flag right here, confirmed. And now it's trying to form some kind of potentially inverse head and shoulders. So let's say we bounce a little bit more, get a shallow pullback, and head higher. That's a reversal pattern, inverse head and shoulders. And we can potentially get that daily uptrend going. And maybe come up and retest this 170 zone, which is this structure right here. You can see we spent like 8 days there, and so right now we're just right under that structure. Let's see if we can just get a shallow pullback, like an inverse head and shoulders, and then break above that structure. It'll be the best thing for bulls. For bears, right? Definitely reject from that structure and then come back, retrace at least 50% of this move, and that'll be favoring the bears. Those are the two things you guys be watching for. Yeah, so just right under resistance at this moment, around this 164, 165 zone. But no signs of rejection yet at all. You can see we kind of pulled back a little bit on Thursday, tried to pull back again on Friday, didn't even break Thursday's low, and then V-shaped. So no signs of any kind of bear at this moment. And Microsoft. A bit choppy, but no red flags either. So yeah, could just be flagging. There's a huge move up. Let's see. Yeah, we haven't even pulled back like 23. We've only pulled back like 23%, so it's not nothing. So this could just still be flagging. If we pull back a little bit more to 38.2%, come back to this prior high, and then act as support, bounce over there, and continuation. That'll be what the bulls are looking for. And best case for your bears, you pretty much need to break below here, break below there, get a big enough move, we can potentially form some kind of downtrend. But for now, really no signs of that yet. Even if we zoom into the hourly, everything's still healthy. Just consolidating sideways after a significant move. So yeah, really no signs of bears at this moment, if you ask me. I mean, this could all change, right? Monday, we got a 3% down day or something, but for now, nothing. I don't see any bears at this moment. Let's look at Apple, right? Same thing, right? Apple's just under all-time highs, right? We have Meta all-time highs. Apple were literally under all-time highs. Microsoft just went up like 8%. So I really don't see any bears at this moment. But when we do see them, we will see them coming because bears need volume, a lot of volume to break for the market. Right? We can look at the Qs, right? You see all these bear volumes during these times when we were just dropping like a rock. So it won't be hard to see when they come. But at this moment, no signs of that yet. Apple just kind of double topping here, trying to test all-time highs. And a little bit weaker than its peers on Friday, but honestly, down 1.29 is nothing at this moment. So slightly megaphone look here. Megaphone is just making lower lows, no follow through, higher highs, no follow through, which is kind of what it's doing right now. Goes a little bit higher, no follow through. Goes a little bit higher, no follow through. Goes lower, no follow through. So we'll see. I mean, if this pulls back all the way down here, then the market would likely drop a lot if this megaphone continues. But at this moment, bears will need a lot of ammo to take it all the way down here. Let's see how much. Yeah, it'll be like a 7% drop on Apple. It's just literally the last hour. All these volume come in and pull back. Huh? Kind of looks like some news, but I don't really care about the news. Price action is already priced in the news, so whatever price I see, the news is already baked in. But yeah, that double top. See if we can get over that. If we get over that, honestly, we just all-time highs. So, which will also fuel up the market. So key watch, see if Apple can break all-time highs and just kind of rip higher. It will be a nice fuel for the Qs. And SPY is already in all-time highs. So if Qs make another leg up, SPY is going to continue to make all-time highs. And as long as the rotation of the stocks keeps happening, right? You see money rotating to SPY a little bit, SPY sector, XLF, XLV, healthcare, the financial sector. And next thing you know, SPY drops a little bit. The Qs gets rotation, money in, right, to the tech sector. Then that means the money is staying in the market and there's no fear at that moment. So that's what we're getting at the moment. So no signs of red flags. What you want to see is like all these mega cap tech sevens in the red, and as well as the sectors in the SPY, like the financial, the healthcare, the industrials, everything. So that means money are leaving the market. If you keep getting rotations, then money is staying in the market at the moment. All right, let's look at Nvidia. Pretty much the most important one, I would say, because it's really not doing that much. So we talked about this tiny range, right, for months. Bounce, 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 and just kind of every move is within the prior move. It gets smaller and smaller and smaller, and now it's kind of like right in the middle and just really doing nothing. So on Thursday we had a decent move, but it's still within range. Even we got a 4% bounce or something on Thursday, and 4%. We're still just in the range, right? Really not doing that much. So what I want to see, pretty much most key for me would be Nvidia. Can it decide to get out of its range, right? If it comes back down, it'll drag the whole semiconductor sector down, and the semiconductor sector will drag the Qs down. So that's the most important why Nvidia is so important, because of the semiconductor sector overall. It's not because, I mean, it has a lot of weight for sure as well, but when you can drag the whole sector down, it's really, right? If this is going down and dragging the semiconductor sector while everything else was green, right? The Qs aren't gonna go in a rocket ship, right? Maybe it'll go up like 0.5% or 1% if everything else was going up, and while Nvidia is going down. So we don't want to see that. We want to see Nvidia popping, obviously as a bull, and you want to see the rest, and then you get those trending days where you get like 2.5% on the Qs or something like that. Those are the best days. But for now, let's see where this breaks. Right, very clear resistance around this 119, 120, and support right around this 114. Even if we break above this 120 zone, I'm looking at this black line where we reject, 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 reject. So it's around this 123 level is going to act as resistance. So we have about 6% upside. Downside, if we come all the way down here, which I don't think we will, that would mean the whole market is rolling over. If we get 10% downside, I mean, it could happen. We've seen 20% drops in just a couple of days. So no, I wouldn't be surprised even if we come down here. But at this moment, no signs of that yet. Yeah, so let's see which way this size breaks. All right, that's all for you guys. Feel free to like, share, subscribe. You guys made this far and learn anything, as well as check out the link below in the Patreon links if you guys want to learn anything about one-on-ones. And if you guys want to learn more about one-on-ones, just check that free 15-minute call. Give me a call, and we'll talk about your sticking points, as well as how to become a consistent trader. And I will see you guys tomorrow for the commodities update. I'll be looking at the commodities. the rest of you guys' day.